So far, it seems like there are quite a few surprising results with higher dividends given by the REITs. In this video, we will go through Keppel DC Reit and Keppel Infrastructure Trust results. One is a data center, while the other is an infrastructure business trust, and we will see how both companies are able to increase their dividends. Is this a sign that Singapore dividend companies are finally recovering, or is this just a temporary increase? So we will find out by analyzing their results. Keppel DC Reit is a good pure data center REIT that have properties in various countries. It has been an attractive REIT as data centers is in demand due to advancement of AI. Unfortunately, due to their China assets tenant facing default issues, I was worried that the temporary loss of income from 7% of their asset will affect them. Looking right off at their key highlights, they have declared a surprising higher dividend at 4.459 cents. If we look at this very good news, for rental reversions of more than 40% for a major contract in Singapore. This is always good news as Singapore is the largest asset for Keppel DC Reit, so it will make a difference in their income and revenue. If we look at their results, revenue and MPI both grew greatly from last half comparison with 11.7% and 12.8% increase respectively. Both was tremendously higher due to the huge positive rental reversion and the inclusion of the settlement sum from another tenant payment lawsuit. Property expenses and finance costs also increased at 6% and 2.1% respectively. However, they are slower as compared to the growth of the revenue. Therefore, this resulted in a higher distributable income of 5.9%. However, because of the Guangdong DC's tenant issue, it has been included in the property expenses. That is why year-over-year is a huge increase of 87.1%. Even though this quarter it included the settlement sum of 6.66 million from the DXC tenant dispute, it's still quite impressive that they still managed to record a 5.6% higher in DPU. This shows the demand for data centers and potentially higher rental reversions when their upcoming tenants' leases are going to expire. The only negative thing is that it's still down 9.9% year-over-year for their DPU. Keppel DC Reit management has been smart and fast in moving to acquire data centers in order to support the DPU. Like I mentioned in my previous video, with Japan being the only country with low interest rate, it is a very favorable place to take on loans to purchase properties. Keppel DC Reit just did that with acquiring of Tokyo data centers with contribution expected to come in next quarter and be DPU accretive. Of course, we will see if this 200 million data center and potentially higher rental reversions of leases are able to contribute enough to offset the loss in property income due to the Guangdong data centers. If they can, we might see another good surprise in Keppel DC Reit's results even without the China assets contribution. One way to estimate is to see the capitalization rate for data centers in Japan. A safe estimate of 4% can be assumed, and based on the valuation of 200 million, they should be able to bring in an estimated income of 8 million. If it comes in higher, Keppel DC Reit's shareholders will be greatly awarded. So Keppel DC Reit's lease expiry is another potential source that might raise their DPU. They have 20% of the rental income leases expiring this financial year. With the increasing demand for data centers, and on top of this good news of the rental reversion, I'm hopeful that they might renew with surprisingly higher rental income. So we have to look into this closely on the upcoming updates on the renewal of their leases. Debt-wise, current leverage ratio is at 35.8% but will increase to 39.2% after including the loans taken to purchase the Tokyo data centers. If we see this sentence, after including the Japan DC's loan, their cost of debt will go down to 3.3% from 3.5%. This again shows how cheap Japan debts can be, and if any REIT is not exposed there, then it's a good time to take on loans. Their interest coverage ratio is at 5.1 times, which is a very good value. Even though we might expect it to drop post-acquisition of the Japan asset, it's not much of a concern as I do not think that the ICR will drop that much. Overall, I think that if the leases expiring this year continue to renew at a very good positive rental reversion rate, with the potential of the contribution of the Japan assets, Keppel DC Reit's dividend have the potential to reward shareholders at a higher rate. There was a recent spike in the share price for Keppel DC Reit when I was doing the video, which shows how the market is viewing Keppel DC Reit as well. The dividend yield at the current share price might be estimated around 4.5% to 4.7%. Next, let us go on to Keppel Infrastructure Trust. For KIT shareholders, there's something to cheer for because they increased the dividend by 1%. However, if you just read a headline news that KIT has a profit loss in the first half of 2024, you will assume that the result is bad. Similar to REITs, because there are a lot of adjustments, we would always look at their distributable income to determine the performance of the assets. I've taken time to break down the individual asset performance based on their distributable income for this quarter. Based on the numbers, it does not look that nice. However, there are a few one-off payments that we should take note of. If we see the renewable portfolio, 22.3 million of the income was used for debt payments. German solar portfolio surprisingly came in bad with a negative 5 million in income. Hopefully this is just a transition phase as there's very big fluctuation from a positive 12.3 million to negative 5 million in the second quarter of 2024. EMK also came in with a bad news with negative 2 million of distributable income. They mentioned that it was due to retrofitting works. The management mentioned about near-term headwinds, so hopefully EMK can still continue to contribute slightly, else this purchase might not be a good one. Ixom, which is a big asset, was lower at 8.9 million of distributable income. Higher finance costs and growth capex were the cause for the drop. However, growth capex might be a good one-time expense for the business to grow for the long term. Philippine Coastal Storage this quarter recovered with a good 2.8 million, while Ventura came in at 2.4 million. It's too early to conclude for Ventura asset as the purchase was done on June. However, for the second half for KIT, distributable income should come in higher. If we see this line, distributable income would have been 117.8 million if not for all the fees. Even though this half's dividend payout ratio is at 120% of 109 million declared versus the 91 million of distributable income, they should be able to easily maintain this dividend for the next half of 2024. With the recent purchase of Ventura Motors and taking on full loans, their leverage ratio went up to 44.7%, while cost of debt went up slightly to 4.43%. Like I mentioned in my previous video, this is expected because they took up loans fully to pay off Ventura. However, unlike REITs, KIT is a business trust and thus they have no leverage ratio restriction. Of course, it's still important that they do not over-leverage as well, and more importantly, borrowers are still willing to lend them money, which seems to be the case. But for the debts taken for Ventura's acquisition, I will be curious what is the next action that will be taken by the management for the 392 million term loans that will expire next year. Overall, with the expectation of better contribution from Ventura and excluding the one-off expenses, I am optimistic that KIT distributable income will come in higher for second half of 2024. Maybe dividends might come in higher, but I think that's a hard shot, so we'll have to see how it goes. At the current share price, it's giving a dividend yield of around 8% at semi-annual dividend basis. In conclusion, both Keppel DC Reit and Keppel Infrastructure Trust have the potential for higher dividends. I'm quite optimistic about it based on their current quarter results. Thank you so much for watching. Please support the channel by hitting the like, subscribe, and comment on your thoughts of KIT and Keppel DC Reit's earnings. You can also watch my recent analysis on Mapletree Industrial Trust or Logistic Trust. Thank you, and I'll see you in the next video.